financial literacy, and the human condition. Welcome to Financial Fitness with the Money Doctor, Dr. Francis Rayam.
Hi, it's Francis. I just wanted to take a minute to thank you for watching this video. If you're catching us on YouTube, please help us help others by clicking like, subscribe, and all notifications so you don't miss any videos. And check back for the next video. I think you're going to love it. Thanks again. For more information, you can visit us at hugyourmoney.com.
Welcome to Financial Fitness. I'm Jay Dean, along with the Money Doctor, Francis Ram. Hello.
Well, hello, Jay. How are you?
Good, good. Beautiful day.
It's a beautiful day, and we have beautiful guests. So I'd like to welcome back, because they've been here once before, but never in a special edition like this. I'd like to welcome back Angela and Mike Tourville from Annie Mac Mortgage. So hello, guys.
Hello, guys.
Hello. Thanks for having us.
Thanks for having. Yeah,
You're
always glad to
welcome.
be back. Yeah,
You're welcome. So let me just give you a brief little background on each of them. Angela is a seasoned mortgage professional, and she's built a reputation as being a lifelong mortgage advisor. In no small part, because she has built a team of experts who support someone through the entire mortgage process. She's not just there when you write your app, you close your loan, you're done. Okay. Mike brings with him, a lot of experience in this industry as well, a deep understanding of the industry, an extensive mortgage lending experience, and he's actively involved in things like community outreach and financial education initiatives, which is how our paths crossed initially. We want people to be smarter about money, and one of the biggest purchases you will ever make is real estate. Welcome back to both of you. Could I start by asking, whichever one of you would like to answer, or both, what about this crazy mortgage market right now? Quick little background in March, right? In March, we had resale housing slump. We had new housing spike. Okay. Who wants to start?
Angela, you're deeper into it, so I would defer to you on this one. How's that?
Sure. It's super hyper local. One neighborhood to the next is complete different ballparks. Then you get the strategies of realtors, maybe underlisting homes and creating a ton of attention. Quick little story. I was on a walk with a pretty high producing listing agent this morning in our area, Hampden County. And she was saying how, she was attracting 30 to 40 people in one day through an open house, but she was only receiving 3 or 4 offers. And in my opinion, and I did have a buyer that was had an offer in on that home, and my buying agent thought that it was underpriced. So I just think that the consumers are a little bit hesitant and scared because they're realizing it's a very big commitment, right? Mm-hmm. And the uncertainty with the economy. So the commitment, they want to make sure it's the right one.
Right.
And so I think the buyers are being a little more particular. And people have been promising rate declines, and we're just not there, right? So
those people,
6% fixed now. Is that what it is?
What headline are you reading?
I've got averages about 6.83% average right now.
Probably more like it. Like it. Yeah.
Yeah. And I think, Angela, you're right. But think about this. It's compounded with all the other external stresses, right? The stock market's volatile, the tariff situation, the employment market. Lots of people that I've speaking to recently are a little nervous. So I might lose my job. There's things that are unstable. There's a lot of uncertainty that compounds, obviously, their stress, and it translates into the real estate market. So you've got many things happening that are unusual all at the same time. And it's unpredictable right now. I mean, you can listen to the experts and they contradict each other, and
yes,
it's hard to say where we're going.
Yeah, that's true. I think, with the resale market slowing down in March, I think it slumped to 5.9%, which was the worst monthly decline since 2022, I think. But the new home sales spiked up, right? They surged to 7.4%, I think. based on what I'm reading, is builder incentives and more affordable housing options, right? So more affordable housing options is probably in your camp because you do lots of things, especially for first-time home buyers, to make things easier for them. Can you talk a little bit about what Annie Mac Mortgage does and what you do through the Momentum Group and through your own skills to help somebody get into a home that maybe thought they couldn't afford it?
Mm. Well, we can definitely help with the competition, right? But you're leading into a question, which is a big question I ask in my consultations, because what I can compute someone to afford is not necessarily what they can afford.
Uh-huh.
And so one of the biggest questions I ask in my, because we always do an initial consult to get, goal gathering and situation, because this is a very situational transaction, right? It's specialized to, or actually personalized to that individual. And the big question is, what is your ideal mortgage payment?
Mm.
And that's where the power lies. I don't think it lies in the purchase price because I can craft a mortgage around that ideal payment and the
Right.
assets that we're willing to let go of or the assets we want to retain. And so everyone's very focused on, and I might be getting off your actual question at this point,
No,
but
this is perfect.
they're
Yep.
very focused on purchase price because there's a lot of outside noise. And I won't say what roles in the real estate team have that noise, but they push to purchase price.
Right.
And so when I'm dealing with a client to give them that power and confidence when they're in the market is knowing their box. And that starts with the ideal payment.
Mhm.
And so from there, we can take it wherever we need to take it. But at the end of the day, they can be confident and aggressive and compete within their means. So when they go to bed at night, if they won that offer or if they didn't, they're satisfied still.
Yeah. So I love it when I ask someone a question that takes them a second to think about it because it means we're digging in a little deeper than somebody might
Yeah.
on a typical show. So yeah, I think all of that is true. How people decide what they can afford for a mortgage is a complete show all of its own, right? But
Mm.
but let's suppose that they decide this is what we can afford. And because they've maybe been to another bank somewhere or another lender, or they just looked it up on the internet and said, here's what my mortgage payment is. They've seen that means you can afford a $175,000 house. And they say, oh, I can't find anything for $175,000. One of the things I notice, I'm wondering if you notice the same thing, that people forget about. Maybe I should ask you, what do you think people forget about? What don't they know about a mortgage if they're a first-time home buyer? What do they not know that you wish they knew?
Can I just say something real quick before
Yeah.
Angela? Because I'll give her more time to
It's a
think
big
about that.
question. Yeah.
And the thing is, we always stress, and I encourage people. There's two things: one, education and preparation. Okay, but early as possible, as advanced as early on in the process, because what happens sometimes it's a Chinese fire drill. We
Yeah.
found a house over the weekend and we need you to qualify us by 2 o'clock. Wait, what? And you've got puzzle pieces of income that you have to figure out, and it's all done in a rush. And then there's things that they didn't, and they waste a lot of people's time sometimes when you find these gaps or qualifying criteria that needs longer explanations or research to figure that out. So the earlier, the better, the more education and preparation the better. So you can avoid those last minute Chinese fire drills. I know Angela encounters that a lot. So what we would say when you're saying, okay, I'm going to start looking for a house, pause, consult. And I know Angela, when you were speaking earlier, you used the word consult a few times because that's what you have to do early on to position somebody early so they're not going through all the motions with no result. Anyway, that's now that you have time to think about your better answer.
Um, Actually, I'm going to jump in the middle, Angela.
Yeah.
I'm going to give you just a second more and
Yeah.
say, Mike is spot on here. What I find people do, what they think the housing purchase market is I go online or I figure out how much money I think I can afford. I calculate by some quick method how much house I can buy, or I get pre-approved for how much house I can buy, and I go and I shop. And because I'm shopping for a $300,000 house, because that's what I'm approved for, guess what I end up finding? A $350,000 house. And what does pre-approved mean anyway, right? So people are making these giant decisions about getting a mortgage, something they are going to partner with the rest of their adult life, or in our case, much shorter, but still many years, right? Without really giving it its due diligence and learning up front what you're going to do, how you prepare for this sort of thing. I mean, absolutely. All right, Angela, back to you for your question.
Well,
Your
my
answer.
brain went to a million different things of what I want them to know after all that.
Great. Okay, good.
One thing there's a lot to know. And again, I think it comes back to situational. It's situational. It always is, right? There's all kinds of factors. What I try to provide and what I want them to buy into when they work with me is trust. I want them to trust that I'm not going to make, number one, a decision for them, but I'm going to give them everything they need to make it on their own.
Yes.
And as far as affordability, that is, I've seen the average income of, $75,000 being able to get into a $350,000 home turn into now 120,000. The median incomes are they're not increasing, but the affordability on them are as far as to get in. So it comes back to developing resources. What resources do you have that you don't know you have? And Fran, you might not like this one, but I go, hey, you have a 401k.
Oh,
you might have a family member. And quite honestly, most people don't realize, and I have to assure them because I have the bird's eye view. They have their own bubble that they're looking in. And I have to assure a lot of first-time home buyers, 60% of the time right now, parents are helping them get into the home. They're helping with the assets.
Yeah.
It's a big thing going on right now.
I'm sorry, Angela, you're right. It's not that I don't like it because it's your money. I don't like doing it the wrong way. I don't like them taking a withdrawal out and getting whacked 20% penalty because they're under 59 and a half. And I mean, a 10% penalty and 20% on taxes, but you can borrow against your 401k and pay yourself back. That's one way to possibly do it. I try to help people conserve their dollars as much as possible because that $20,000, $30,000 that they might be wanting to borrow against their 401k to help them with a down payment might turn into, $100 a month in a payment over the course of time. And they can more easily tolerate the $100 a month and leave the money in the market where they can grow it for their retirement someday, especially if they apply something like our system that pays the debt off quickly, including the mortgage, right? But I tend to look at it from an advisory standpoint like that. Like, yes, I want you to get into a home. That's what money is for you to achieve your lifestyle goals. But I want you to do it the smartest way possible financially. Where I was headed, and folks, if you're listening to this, you can tell that this is why Mike and Angela and I are talking, and I'm not talking to a big box bank VP, because these folks think like this about your mortgage. Okay, they actually care whether you're going to be able to afford to have this house or not, in part because of their in-house program, which we can talk about because that's part of what makes them a different lender, makes Annie Mac a different lender. But where I was headed with that, I almost forget now. I did forget. Where was I headed?
I think I know where you were headed, how we can give an edge to our clients.
No, it's just before that, talking about finances and well, it doesn't matter. Anyway, I'll pick it up from there and edit it out. Yeah. But anyway, they actually, if they actually care about what happens for you, the one thing that I was hoping Angela would say, but she's got so many things she wants people to know and remember when they're getting a mortgage. For first-time home buyers, and maybe even people who have already owned a home and are looking again, they forget taxes and insurance. They go and pre-qualify for how much house they can afford based on a principal and interest payment. And taxes and insurance change your life. So you got to go talk to professionals like this before you put your offer in on your house, before you go shopping, and find out what a real pre-approval, and that is not an approval, but what a real pre-approval means. So Mike, this might be a good question for you, even though I know Angela has the answer too. But in terms of education, what's available at Annie Mac to get people to understand this stuff before they get themselves in trouble?
Well, there's a lot, and there's so many things that now I forgot what I was going to say. See, it's contagious, isn't it? But
Good.
um, but one of the things is you say, look, it is. You look at, you said taxes and insurance. When's the last time your property taxes decreased?
Right.
When's the last time your insurance decreased? Okay. Now your mortgage principal and interest payment may stay the same for the duration of the loan, but there's a strong likelihood both your taxes and insurance are going to increase over time. So you have to think about that, not just the amount, but they're likely to go up and increase your mortgage payment all in.
That's right.
So that's always something to consider too. I'm glad you brought that up. And the other thing too is we encourage our borrowers to seek advice from a financial advisor, because some of the things you mentioned, if they're going to put 20% down and they say, I'm going to put 20% down and get 6.8 with no points, perfect. They've decided that at their kitchen table and they think, well, that's what Angela presented. Well, that's what my loan officer said. So that's what I'm going to do. Well, why don't we pause and think? Because does it really make sense to use an asset to put 20% down? Maybe there's some other consideration to put less down, reserve the assets, and your monthly payment might be adjusted by just so much. Yeah, what about paying 1 point or 2 points to change your rate? And
Right.
we have a program, and Angela uses it often, and every borrower called Mortgage Coach, where we compare paying a point or two, paying 10% down versus 20% down, how that affects your PMI. So the point is, it's a big picture where having some professional advice can help you say, here's how this is going to impact your assets, your 401k, your cash flow. And to look at that whole picture from an outside third party is, we encourage that because it's very helpful, because that's when people have the aha moment, go, oh, I didn't think of that. I didn't think that was an option. So we try to encourage people to do that and present them with those choices. So in the end, nobody's going to second guess and say, oh gosh, I wish we had known this.
Yes.
So
Well, you brought up another perfect point of things that people don't think about. They don't think about PMI. For those of you who don't own homes with PMI, that's private mortgage insurance.
yeah.
I call it throwing money out the window, but that's what I get to say from my side of the desk.
I agree with that.
I thought you might,
Yeah.
Jay.
I just say thank you for, paying some insurance for the lender, because in the end,
Yeah,
that's what it is.
exactly.
Yeah.
Oh boy, I have a great question for you sometime, but it's going to drag us way into another topic. But remind me to
Okay.
ask you about PMI and the housing bubble. That would be fun. But Jay, I thought you might agree with that because, private mortgage insurance you pay because you have less than 20%, and you guys can correct me if I'm wrong, of course, less than 20% equity in your home, right? Some mortgage clauses say you have to have 20% equity or you have to have paid in for 2 years before you can try to get rid of your private mortgage insurance. Okay. Private mortgage insurance is going to cost you X number of dollars a month. It's insurance. What you're doing is insuring the lender in case you default on your loan. That can be hundreds of dollars a month for people, which could make the difference if you have a creative lender like Angela or like Mike, right? It could make the difference between how much house you can afford and how much house you can't afford because you had PMI. And there are ways to get around it. There are creative ways to get around PMI if it's the right thing for you to do and if the numbers come out right. But Mike is correct. You need to zoom out and look at the big picture. And I'm going to just step in here and say, yes, ask your financial advisor. But get your antennas up because not all financial advisors will either know this stuff or care, or they would prefer to keep your money in the market for some reason that maybe doesn't have much to do with you buying your house. I'm not suggesting nefarious means. I'm just saying they may have a different vision than you have. So you got to get somebody who's going to come to the table with your mortgage brokers or mortgage lenders, excuse me, and say, I like where you're headed. Like I've seen the software that Angela uses. It's very good. It gives you a really good comparison about how to do this well. And she uses it, I think, almost on every deal, right? And so you get a lot of, you get a lot of material there, a lot of input that you might not get at a typical lender. And this is a good time for me to say, I don't make any money on this. I'm not affiliated with Annie Mac. I don't get any overrides. This is it. I just happen to like their model, and I wanted to have them on again.
Can we get the phone number, Francis, from you for people?
Of course, they can reach us at 413-773-3333.
Of course, as always, you can go to hugyourmoney.com. And we will be back with more Financial Fitness with the Money Doctor, Francis Ram, coming right up. This is Financial Fitness with the Money Doctor, Francis Ram, on WHMP.
Financial Fitness with the Money Doctor is underwritten by Franklin County Technical School. We build futures. Visit fcts.us or call 413-863-9561.
Welcome back to Financial Fitness. I'm Jay Dean, along with the Money Doctor, Francis Ram, and the Tourvilles. Very happy to have you here. Great stuff. Great stuff.
Thanks, Jay. Yeah.
Can I throw a couple things in real quick? My wife and I got our house in 95, had it built. Thank goodness it's paid off. And we were talking before the break about PMI. And I thought, and maybe you guys could answer this question for me, because I always want to know the answer. It did not drop off after our levels got to that certain point. Was that because that law didn't go into effect until after 95? I was asked to jump through hoops. Oh, you need a comparison. You need this. You need that.
An appraisal or
and
enough equity.
I said, no. They said they had already done an appraisal. I said, send it to me. They sent me the original comparative before the house was built.
No, and you got to prove that you've paid your loan down by that amount, or you get an appraisal that shows you have that much equity in the house. Angela and Mike may have a different slant because their fingers right on the pulse, but what say you?
Well, one of the things that kicks in, and then Angela can elaborate on this, is when your loan value reaches 78% or lower, it should come off. But the obvious thing is, who's going to know? How are you going to convey that to your lender to say, now it's time? Because they're not looking out for you. We are, but so that's one thing. Angela, you can elaborate on that.
Yeah, I mean, what you said, Jay, is they're going to go off original value. So they do make you jump through some hoops. And what's happening right now with the appreciation we've seen since COVID is a lot of people are at that loan to value percentage before 2 years. And so they're thinking they can drop it. So with my servicer, if I log into my mortgage application, it'll tell me how many years are left until I reach that percentage. If I want to drop it before then, yes, I have to prove the value, and typically with an appraisal, and then they have to agree upon it, and they charge a fee to do it. Now, if you're paying $150, $250 a month in PMI, it's worth the $500 fee and $600 for the appraisal, in my opinion.
Right.
Some programs are PMI for life, though.
Like
Those
an
are
FHA loan.
Your FHA loan is PMI for life. So you have to actually get out of the loan to drop that. So that you can, let me go back a little bit though. If you put 10% down or more with an FHA loan, it will actually fall off, but typically people aren't doing that in that
We
lending
put down
environment.
5, as I recall. 5%.
Yeah, typical. Yeah, that's a typical down payment. But there's more ways to pay your PMI than monthly. And that's when we get into strategy. That's when we get into strategy.
I love that word, strategy. All right, tell us, Angela.
Oh, okay. Well, it sort of goes hand in hand with the high interest rate environment we're in. So with the presentation that we use, a lot of people are still conditioned that 20% down is what you need to do to get into a house. And this is where a lot of people say, I'll never do it. And that's true, right? So, but they'll come to the table with 20% down. And sometimes what I'll show them is the 20% down that they wanted to put. And then maybe I'll show them 18% down and buying out their PMI for a small fee and using the additional funds out of that 2% we saved to permanently buy down their interest rate. So now they're netting the same cash out, but their monthly payment could have been saved almost $300 a month, spending the same amount of money, which in turn could increase their purchase power too, which would allow them to be maybe pre-approved up to 400
Right.
But look at those $300,000 homes and leave that wiggle room for bidding and competition. So really hard to understand that though if you can't see it. So that's why we consult visually.
Yeah, that's a great point. I was going to mention that earlier. There's choices to pay it up front or a combination upfront and monthly. Certain loan programs will allow that. And if you're strong on your assets, but weak on the debt ratio and payment, this might be an option to solve that, and vice versa. So when we spoke earlier, and Angela's saying, look, when you talk about creative ways, and I bet you, I know a lot of loan officers, lenders won't offer this or think about it. And a lot of borrowers then therefore don't know about it. And that's what I was saying earlier. Later on, when you learn these things after the fact, you start, gee, I could have done that. Had I known, it would have made more sense. So
I have
It's
a
always
really
that-
cool, oh, sorry.
No, go ahead, Angela.
yeah.
There's another really cool insight. Most lender, just speaking of lazy
Yes.
lenders.
Yeah. Okay.
With the new pricing adjustments that we've had over the last couple of years, you're going to get a better interest rate at 5% down than 10.
Really?
How does that work? Yeah.
Well, there's
Yeah.
price adjustments based on
Yeah.
loan to
Yeah.
values and credit
Right.
score. So back in the day when Mike was writing loans left and right, and I was probably in middle school still, he had to manually calculate his interest rate. Now we have technology, but if you know the behind that technology, as a lender, yeah, I know they want to put the higher down payment, but if we put the lower down payment, maybe we buy out the MI, and maybe we can take that chunk and do what's called a recast after we close. Now we ended up with the lower rate, no PMI, even though we did a low down payment, and a recast is almost the same as putting that money down when you purchased, but doing it on the back end. So you end up with the best of all the worlds.
Yeah. And explain what recast means, because it doesn't come up that often,
It
Angela.
doesn't. It's such
That's
a
right.
great strategy.
Yeah.
To all the equity out there. So recasting is when you have a lump sum payment, and you want to put it down on your mortgage balance. If you were to just make the payment, down on the balance and lower your balance, your payment does not recalculate.
That's right.
A recast is recalculating your payment based on that new balance over the remaining term of the loan that you have.
Yep.
Some would call that sounds like a refinance. Well, guess what? It's not, because we're not refinancing your loans. You get the same terms. You're
Right.
just recalculating the balance for a nominal fee, maybe $300 to $700 to get that done. So that's another strong strategy.
It's brilliant to say to recast up front like this as one of your strategies. I didn't know you did that, but it's brilliant.
yeah.
I love it. Then we're such geeks, right? We're such
I know.
financial geeks. We're like
it just
getting all
it
excited
works.
about this stuff.
I know.
But that's a real strategy that you would not know. I promise you, you walk into any big box bank, somebody call me. If you walked into a big box bank and said something like this and they had even any idea what you're talking about, never mind that they proactively tell you, hey, here's a way to get you into this house. I just want to thank Angela and Mike Tourville again.
Thank you both.
For coming on from Annie Mac Mortgage, and mention that they're part of the Momentum Group.
Francis, can you give the phone number again if people have questions for you?
Sure, of course, Jay. They can reach us at 413-773-3333.
Or as always, go to hugyourmoney.com. Angela and Mike, thank you very much. This is Financial Fitness on WHMP.